Morning, Blake. Ozzy will be. Who's ready to rock? Blake sounds like he's ready. We will rock you. Thought I'd come on, say hello, show my face and face today. Everyone doing okay? Okay, Shahab. All right, just a couple of things. You're ready, Stavros? Hi, Brock. All right, a couple of potential fades for me that I'll be considering if we get the reaction to set it up, right? You never know what kind of reaction you're going to get to the NFP until it happens. That's why I mainly stay flat, because it's a roulette bet, right? At least for the first 15 minutes or so. So, okay, here's one. If we get another push up in euro, here's drive 1, here's drive 2, here's drive 3. I find the oil interesting looking right here, okay? This was the high before last Friday, right? And I mean, I could even go longer term. Okay, I mean, they got all the stops, right? All these stops, and everyone who stopped out were right now about, I don't know, 50 points underneath the high of the range. We're back in the range, but if you look at the form here on the 1 hour, it looks pretty good to me. Confirmed high, diverging, one more push. Also keep in mind energy tradings. Oh, thanks, Forex Scale. Anyway, see how trading can age you? I'm 39. Anyway, keep in mind that Saudi Aramco deal is finally supposed to happen, right? Next Wednesday is what I'm hearing. Also, we have an OPEC meeting going on. Yesterday, I saw that they didn't have a press conference, so I don't know if they came to an agreement. Since I went to bed last night and woke up, I haven't been scouring the news. Anyone know if OPEC made a statement? They canceled their press conference yesterday. All right, so this is something I'm considering too for if we get a rally to new highs and the RSI stays under 70, and the S&P is having trouble at some of these moving averages here. Blake pointed out we were 61.8 right here, and we did get a nice little scalp if you paid attention to 61.8, and now we're here again. I'm considering fading it. Maybe I won't have a chance if we get a weak number. We'll see. Also, with the S&Ps having trouble at, there's a few moving averages coming in right around here's a 4 hour with the 200. So facing some pretty good resistance. I'd be willing to fade this at new highs. Okay. This was, I think it happened, may have been yesterday. Anyway, so it's almost confirmed. So I might be considering something up here around 31.30. And check out NASDAQ. It was weaker, and it's really been weaker than the S&Ps for a while. Look at what it's playing around with up here. So no volume on YouTube, guys. So this is the wedge line. I know it's not the greatest color. It's lime green. We had the throw over here. Everyone see that green? Can you see the lime line? Lime line. Does it show up? Okay. So we had a throw over. We're back underneath it. And now we're, testing it a couple of days in a row. And maybe they'll try and spike above it. But the market has a chance to have a pretty negative week if we don't really rally. We're lower on the week in both S&Ps and NASDAQ and Dow. Currency-wise, the yen doesn't look good. It's had a pretty negative week, and the S&Ps have recovered much more than the yen. I just have a hard time wanting to short it right here because I'm starting to get some divergences in the dollar. And what I've noticed in the dollar is, it's very crowded, the long dollar trade. And now I'm seeing on the DSI, 50% bulls, more people, Euro back up into the mid 30s from, 20. So, the bullishness in the dollar is not as extreme or one-sided as it's been because, we've had, how many weeks since the high up here, 1, 2, 3, 4, 5, 6, 7. But this is really looks like an ugly week. We close under here, 96, looks like a lock. But anyway, it's not as one-sided as it has been. People are willing to fade the dollar now after the market hasn't made a new high for a few months now. So I'm just talking short term. Like I would sell a rally in the dollar. I don't want to just be blindly short after this break. I'd sell rips here. Swiss, you got to sell rips if it gives it to you. You don't have to. You never have to. In fact, you don't have to do anything. In fact, you don't you don't even need to have an account. It's not against the law to not trade highly speculative, highly leveraged markets. So I do it because I love it, and I like to win. And hey, I'll admit it. I like to have money. How about you guys? Hi, Monica. Who else likes to have money? Oh, okay. Thank you, Gautam. 5,000 agreed. Okay. Liz likes it. Blake, I don't know how Blake's views on money. I don't think it's
a
that
means.
important.
It's a mean. It's not that. It's not super important.
Yeah, I knew you were going to say that.
Yeah, I mean, to me, it's more of a means to just, it's
Buy
more
things.
security.
Huh?
No, I don't care about that. I don't care about
pay your
materials.
mortgage.
No, it's just to make sure that my family's got security. That's it.
Okay.
Yeah, that's it, really. Yeah.
All right.
So, yeah, Joe said, happy wife, happy life. That's right. But good news is my wife she doesn't desire expensive things.
She's not high maintenance, Blake.
No, she's
That's
not,
nice.
unfortunately. And probably one of the reasons what attracted to me her in the first place is, and just if you guys have watched my interview with Chat with Traders with Aaron. And that's probably one of the most viewed Chat with Trader interviews that he has, probably within the top 10. It's probably got 50, 60, 70,000 views or something. And some people have followed me in the FX just because of that interview, because I told my whole, it's an hour long, like telling my story. But the one thing that my wife has been with me through thick and thin has been with the ups and downs in the markets. And when that happened before we got married, especially after September 11th, where we got absolutely crushed because one of our traders took big positions in the market, and I was a principal of the firm, so he took big positions in the market without us knowing ahead of September 11th. And so when we were closed for 3 days and gapped down, it absolutely crushed us. And as a principal of the firm, I had to cough up the money to the clearing firm, which at that time was,
you have net cap requirements.
Yeah, it was pension financial Penson
Okay.
Financial. They were our clearing agent, and and that crushed me on top of the positions I already had on. And my wife, she stuck with me thick and thin. So that's always a good
good test.
Good test of somebody. But especially in the place I live in Scottsdale, Arizona, which is like
Beverly Hills of Arizona.
Yeah, I guess you could call it that. And people desire very nice things
Rodeo
around here.
Drive.
And yeah, no, not really, but it's more of, you got to keep up with the Joneses type of thing. And we don't really care about that. I don't. And anyway, that's
you want to
it.
hear a chorus of me and Mrs. Jones?
Sure.
No, go ahead. I can't go that high.
Okay.
It's a great song, though.
Well, today is non-farm payroll, and that's
Yeah.
one thing we need to cover today is what's happening with the jobs report. Now, a lot of the banks have come in with pretty low estimates, so surprisingly, especially after the GM strikes, I've only seen really one bank, and I believe it's Barclays. It's looking at a pretty good number. This is Bloomberg, just so you can see what Bloomberg average is looking at as 183,000 jobs created. Now, I think the whisper number is going to be a lot less than that, probably closer to like 130, 140. But the guys at my firm believe that that these numbers are really going to be more or less irrelevant, just because of China, Brexit, USMCA, all these deals that we have in the works going into the end of the year, that it's not going to be that big of a deal. So I'll tell you what I'm obviously looking at is a couple things, and here's why I believe it's not a big deal until it is. What I mean by saying that is no one cares until they do, until we get that one data day where non-farm payroll blows us out of the water and we see 150 pip moves and we go, holy crap, I guess the market does care. Remember, and this is something I need to say to you guys as a warning. The market is extremely complacent right now as we await a China-US trade deal. Very complacent. People are just not willing to put a lot on the line, and that's it makes sense. I mean, the choppiness that we've seen as of late is ridiculous. But if we get an outlier, like let's say just a really strong number. So I'm going to go back to let me pull up Data Flash because it's easier. It's right here, so I don't keep messing up my Bloomberg screens because they're already set up on all my monitors. But if you have ForexAnalytix, you can use Data Flash. I obviously pay for Bloomberg, so I use it. But Data Flash has all the data here. This is included with ForexAnalytix. Oh, dang it! I hate it when that happens. Give me 1 second, guys. Sometimes when I pull over a screen, it makes everything disappear. Sorry, I gotta make some adjustments here. Okay, so anyway, having the Data Flash over here, let me just move it out of the way. If the numbers come in, let's say we get a really strong number, an unusually strong number. So let's say we get 180 to 200,000 jobs were created. The euro should probably reject the 618 retracement, big trend line. We're going to move down pretty aggressively, I would say. The euro is probably going to be trading below 110.50. A weak number, like let's say 100,000 or less, the euro might actually pop above this resistance. And then if we start clearing some of this resistance, and keep in mind, this is the 200-day moving average that comes in right at this, downsloping trend line. And this trend line that's in blue dotted trend line, that's from the highs back here in 2018. So that's a pretty massive trend line. Then you got channel resistance. For some reason, if we come clearing, let's just call it 111.70, then we got a really big breakout. Then that's where all the stops are going to be at. And and let me just say, I'm not expecting that. I need to put that out there. I am not expecting a big move like that in the market. But when you least expect it is the day that you get it. You know what I mean? It's one of those things. It's like it's a black swan event, if you will. Not necessarily the jobs report's going to be that, but if the market starts to sense that employment is really starting to weaken, that could be, a tick up in an unemployment rate to 3.7, 3.8%, or, non-farm payrolls, adjusting down by 100,000 or more. I mean, that could be a shocker, and that could throw the market into a tizzy. So just when everybody's very complacent, thinking, nothing's going to happen, those are typically the times that you do see an explosive move. Not saying that that's going to happen. I actually don't expect one today either, but we always have to be on guard. And so I guess what I'm trying to say here is, if we start to see a big move, and let me give you an example. Let me just take a 15-minute chart, and let's just talk about today. So let's just say, for some reason, and I'm going to draw this out for you, then I'm going to delete my lines here. Let's say the euro does this. It busts out to new highs, and here we go. We go to 111.40, and we don't see a pullback. That means like we have like 15-20 minutes just kind of consolidating. Guess what? The next move is going to be a lot stronger. It's going to really break out. Now, what I think is going to happen, and this is just me. Let's just say we get a weak number. Euro's going to spike up just like we did the other day. It's going to spike up and clear out some stops and right back down. That's what I expect to happen. That's what I think the idea is here. But again, if we get an explosive move and it doesn't pull back, then I would expect a continuation. So just think about that for a minute. Also keeping in mind that this is because the euro is right at major trend line resistance. Also, the pound is right up at major trend line resistance. The cable, don't forget, is at multi-year trend line resistance right now, and a move above 132 would be very bullish for the cable. We haven't had any new polls. I don't know if we're going to get polls today or maybe over the weekend. So you have to be a little careful with the cable up here after a rally. I've been trying to buy dips, but there has been no dips, because I was long the pound, sold it. I was long at 129.80, 70, somewhere around here. And I sold it at 130.80, made like almost 100 pips. And then I took it off when we were at the 127% extension. And then because I knew that all this confluence was coming up here. But again, we're going to have to see a pretty weak number in order for the cable to move above this resistance, especially ahead of the elections next Thursday. Okay. Kiwi, extremely strong move above the 200-day moving average. We're at the 618 retracement right now. Big trend line coming into play just above current prices, but we have this inverted head and shoulder pattern. There's a guy in our chat rooms like, oh, I think this is going to complete this week. If we hit 67 cents this week, I'm going to have to go congratulate a gentleman in our chat room. It was like, I didn't think we'd even get close to where we're even at right now. I thought we would stall here at the 200-day moving average, but the Kiwi is on fire across the board, even against a lot of these, cross rates. Look at the Aussie New Zealand. You should just look at the Euro New Zealand. The New Zealand has gone a lot farther and faster than I thought it was going to all week long. Another thing we have to look out for is the dollar Canadian. The dollar Canadian, just because we have Canadian job numbers. This is a multi-year trend line that comes into play down here. It comes in right around the 131 and change. We've already seen a beating of the US dollar Canadian. The Canadian dollar has strengthened quite a bit ahead of the jobs report due to the Bank of Canada this week. They were a little bit more upbeat than the market was expecting, and the dollar Canadian came out of this triangle, and now we're at a big confluence. 261% extension, 161% extent. 618 retracement. We're not oversold by any stretch of the means. I think on the hourly, just working off some oversold conditions right now. Yeah, but the dollar Canadian, I think we could get one more drop. However, if we have a weak Canadian data print, then that might be a different story. Now, speaking of Canadian data prints, let's go over to the Canadian data. Where is my where's my Canadian jobs data? Oh, there it is. Let's go ahead and do this. Okay. And let's look at the chart. Whoops, I just scrolled right past it. There's the chart. Okay. And you know what? Actually, I'm going to pull up a different chart. This will give you a little bit better. Let's implement change. Let's do this. What you'll notice is, seasonally, as we get into the latter part of the year, we tend to have a little bit better data for Canada. So seasonally, you might get a better jobs report out of Canada, which means that we could quite possibly see, 131. 50, 131.30 before we see any meaningful turn in the Canadian. But if we have weak U.S. data and strong Canadian data, the dollar Canadian, maybe we will threaten this support. I'm very reluctant to believe that we're going to be breaking out in any meaningful manner because the market is so sidelined, waiting for China-U.S. trade deal is the big one, obviously. Brexit, and then USMCA. But with a completion of a China-U.S. trade deal, all that gamma in the euro is probably going to disappear. You're going to stop seeing so many options bottling up the euro volatility, in my opinion. But we have to see a China-U.S. trade deal in order for that to happen. And hopefully this next week before the 15th of December, we get something. I just think, hold on. Donald Trump says stock market's up record numbers for this year alone. Dow up, blah, 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 blah. And then FX Macro, who is the owner of the firm I trade for, he said he has the number now touting equity gains ahead of NFP suggests a weaker number, which, yeah, I mean, because he got the numbers last night. I think the president, we were talking about this in the office yesterday. We think he gets the data the night before. So, maybe he is kind of playing up the strong stock market in case of a weak number. Who knows? Who knows? So we'll see. Maybe he also gave a directive to adjust those numbers ahead of the number. Who knows? I'm joking about that. We would never do anything like that. Only China does that. Oh, I guess no one else is listening to me. Hey, Dale, are you there?
Yeah, buddy.
Sorry, I had to throw that one out. We don't do that. We would never do that. So anyway, those are
He's he's trying to pump it up to get his shorts off, but he wouldn't do that. What do you think?
No. He's, maybe to suppress any downside move. But this is something else that we need to pay attention to is the dollar yen. I'm a little irked at the dollar yen because this is one of the trades is turned my quarter negative. Was this, and I say quarter because it really did. I was long, I was short as we were approaching this 200-day moving average right here at 108, 60 or whatever. When we spiked above this resistance, I'm like, ugh. And because I was like really barely break even like for the last couple months, just because the market hasn't done anything. But taking that loss in the dollar yen actually put me negative for the quarter. Good thing is I still have a few more weeks to make it back because I work on a quarter by quarter basis. So, but then the dollar yen turn on this, what everybody was looking at, this big inverted head and shoulder pattern, right? So big inverted head and shoulder pattern,
false breakout
turn, and now we have to be careful if we break the 108.20, and that's obviously
heavy.
Yeah, it is definitely trading heavy, and but look at the dollar, against the euro, against the pound, against the Aussie, the Kiwi. So these are just the things that we need to pay really close attention to, because if the dollar does decide to move, it's going to show up in, across the board. One last thing, and then I'm going to let Steve, are you here?
Nope.
Okay, good. Steve's not here, and I know Stelios isn't feeling too well today, but we should be watching gold. I really want to confirm that let's say the number is weak. Let's just argue and say that the number is a little weaker here. Gold at this 1490 is going to be really big. So if we, you can see this little flag. Let me go to a 4-hour really quick. I'll draw it out. See the gold market, right? So if gold really starts to break higher, this is where we need to clear. We need to clear like 1,500. But if gold is breaking out, that would be my indication that the dollar is weak and it's probably going to stay weak. But and then because then the gold market would be in breakout, massive breakout territory then. Again, I don't see all this happening. I'm just giving you the what ifs. But you got 5 minutes till the data comes out. Guys, if you haven't tried out ForexAnalytix, make sure you do so you can jump in the chat rooms where I'm at all day. And Steve's in there, and Amanda's in there, and Stelios is in there, and Paul Franco's in there. And on top of all of our other traders that have been in the community for some of them as long as, well, I've been chatting with for over 10 years that are in the chat room. So look forward to seeing you guys in there. And I'm going to pass it over to you, Steve, and hopefully Stelios is here too, and Dale.
He is.
Guys. TGIF, guys.
Yeah, have a great weekend,
mate.
Blake.
You too.
I'm
All
here.
right, hunting.
Stelios, glad you're feeling better.
Yeah, I'm a little bit better. Yeah, thank you. So, okay. So what have we got? We have obviously non-farm payrolls. What happened overnight? We had some more election polls from the UK. The Labour, there was one poll which showed Labour tightening up the gap just a little bit, but it doesn't look like there's enough time really for them to do anything meaningful. But that could be the reason why the pound is a little bit weaker today. We also had German industrial production came in at minus 1.7% month on month. It's the biggest drop since the 2008 crisis.
Bullish.
Yeah, sounds very bullish. And it's not like Germany has a big, it depends on industry at all, right? It's also
no, not at all. Yeah.
So
they're just on a buying binge on credits. Obviously,
yeah, so,
I'm kidding.
Yeah, that was a particularly bad number, and like Blake mentioned before, we had the 500,000, or Dale, was it the 500,000 barrel cut that OPEC agreed. So that was
whatever is needed to get the Saudi Aramco
IPO. Yeah, exactly.
IPO out of the way, and then they can just
Yeah. And it was a
is
rumor
very likely that crude is going to behave like, by the rumor, sell the news having to do with Saudi Aramco's IPO.
Yes, I agree.
Once they IPO it, I won't be surprised if crude just, the bottom falls out of it.
Yeah, and there was the rumors of that yesterday, and obviously oil was quite a lot stronger yesterday. And now that it got confirmed, oil has done nothing. Actually, it's dropped a little bit. So it's all priced in. And like you said, I think when the IPO does happen, it's probably going to be a good place to be short. Otherwise, nothing out of the US-China situation. More rumors here and there, but really nothing substantial. So and that's it. I don't think there was anything other major overnight.
Is that Mike?
That is Mike. Yeah, crying. He wants to go out. Mike's my dog. It's not my son, by the way.
So you're not putting your son in a cage?
not usually.
If only you had one, right?
Yeah. So we have payrolls in 1 minute.
Yeah, we have quite a lot of data. We also have Canadian data coming out. Employment change expected to be positive 10,000, with previous one being minus 1.8. So let's see if we're going to indeed get a rebound there as well.
If you remember, there were a couple of very strong prints, Canadian employment change. There was like a 70,000 print, if I remember, another 60,000.
Yeah. We did have some huge
ones.
outliers. Yeah, that's very true. We did have some huge outliers. So we're like roughly 30 seconds away from the data. USD Canada, USD CAD is open here in the middle bottom. USD Yen, bottom right. Euro, Pound. Let's switch here to the S&P. And the Australian bottom left. So let's see. Roughly 10 seconds left.
Yep.
I also agree that only like a big outlier can actually move the market. I mean, if it's going to be instead of 180, if it's going to be 160 or 190 or whatever, I don't think
It's weak. Oh, it must be good.
Oh,
S&Ps are rocking.
Wow.
Yeah.
And the
It's a
revision is
blowout.
higher as well.
It's a blowout number and revisions higher and unemployment lower. US average hourly earnings though are lower as well.
Wow, look at
Manufacturing.
Canadian number, minus 71,000. So
Yeah, the Canadian number is like horrific. That's why we're seeing look at the USD CAD response, the combination of big US numbers with very, very, very bad employment. Just Stelio, just look at the Canadian data here. This is horrific. Not only we got minus 71,000, we got unemployment climbing by 0.5%, while participation rate dropped actually.
Yeah, that's huge move. Yeah, huge.
So that's like a huge negative number for Canadian dollar. Huge. So USD CAD obviously responding very, very strongly, and the combination of the numbers is obviously going to create like a huge response here. We're already from the lows of the day, we're already like 70 pips higher, and it is very likely, if we see a continuation here in the dollar, it is very likely after that number of Canadian data, because yes, US data was a lot better than expected, but really, I mean, in terms of statistics, this Canadian unemployment employment change and unemployment rate climb must be like a 4 sigma event or something like that, Stelio, right?
Yeah.
Okay, so yeah, USD CAD at the highs of the day, USD yen at the highs of the day. Obviously, euro and pound coming under pressure against the dollar. Same thing with the Aussie. Let's see how the Kiwi, which has been one of the best performing, has pulled a little bit back but remains very well bid. The S&P is at the highs of the day, taking the news positively. I think that with
in our sell zone on the S&P, Steve, up here.
Yeah, I think the issue here, I was about to talk about the S&P in what regards, Dale. In regards to what, with the recent statements that we've had from Powell, we have the following peculiar situation. Good news from the US is probably good news from the stock market, and bad news from the US is, unless they're very bad, they're like more or less indifferent news to the stock market. And why this is the case? Because in essence, and we've mentioned that before, Powell made clear that there are only two ways forward having to do with monetary policy from here. The hawkiest scenario is staying as they are, which means with quantitative easing and rates being where they are, and in any case, responding with lower rates and being unwilling to respond even to quite higher inflation, which means that the market really doesn't have any more so much to be afraid of in regards to good economic data, because after the recent statements, it's not that the market will think like, oh, we had good data, so Powell is now going to go on a hiking cycle again, and they're going to reconsider and they're going to start hiking. So, you know, why not take it positive anyhow? So let's see how the market reacts from here. As you said, we are entering in the short-term resistance zone here. And if you remember, I was saying yesterday that USD yen is definitely not bearish as long as we are above 107.80. And specifically, if you see on the daily chart, oops, wrong chart. If you see on the daily chart, the USD yen is actually finding perfectly support from the 50 daily moving average. I mean, it did it here, it did it there again, and it has been doing this the last 3 out of the 4 last trading days we've had. So, of course, does this make it bullish? Once again, I'm going to say that we have a potential inverted head and shoulders formation here. and I'm going to turn bullish the USD yen. But in order for that to happen, I need to see this neckline taken out. Anywhere between 107.80 and that area there, like 109.70, let's say, 150 pips, let's call it. I think everything in between is noise. And if you notice, despite the good data, I mean, it's not that we've had like some kind of spectacular move here from the USD yen. Yes, it is at the highs of the day, but it's nothing, really.
Yeah, we're up 13 pips.
Yeah, I mean,
it's a reversal, but it's not like it's blowing the doors off. Look at
yeah, exactly.
Put the weekly candle up and see if it looks great.
Let's do it. There we go. Here's the weekly.
It is Friday after all.
Yeah, it's still
red
look
candle.
That good, right?
Yeah.
Yeah. It's still good an outside black candle.
Good perspective, Steve, for the group. Because in this environment, we seem to overreact to things that were nothing to us before.
Yes.
Oh wow, look at the end. I hear it from people that attend our webinars. Oh, look at the euro, it's exploding, and I'll look and it's up 25.
Yeah, and
that's an explosion nowadays. Okay.
Yeah, that's an explosion, and I vividly remember the days that we've had on a daily basis like 150 pip ranges, easy mode, without anything really big happening. I mean, without
anyway, I'm fading stock indexes here, and just using some money stops and see how it closes.
The risk reward is appealing, to be honest. Now, USD is indeed well beaten. Speaking of which, perhaps this little sell-off, one of the things I wanted to show today, Dale, is this. This is the Bund. And as you see, we've had this interesting breakout from this inverted head and shoulders formation. And the target is up at 173.73. So perhaps
maybe that drags a 10-year up to 2% again.
Yeah. So perhaps we get something like this. I mean, the Bund to the upside doesn't look like a bad opportunity, especially if we are lucky enough to come back, retest, let's say 171.
Yeah, remember yesterday someone brought up, could the 10-year trade 2% again, or 210, and you pulled up the 10-year yield chart, and the channel would allow for it in the 10-year yield.
Also, another 4-hour chart I wanted to show today, and look at this beautiful reversal on the 4-hour chart, is this. We had this triangle here in the Australian dollar. So, we had a nice, quite impulsive in the short term move higher in the Aussie USD. And we had that triangle, and we were looking like we were breaking out to produce one more move to the upside. Now, temporarily, after the job numbers we got, as you see, we got a nice rejection. And as it seems, at least during this 4-hour candle, we're not going to manage to break above this triangle. Not that this invalidates this view that this looks like a corrective formation, and we might probably see at least one more leg to the upside, but as it seems, this is, at least for now, getting postponed. Crude, if we have a look at it in the short term, on a short-term chart, which is, for me, is a 4-hour chart, once again rejected from the 61.8. I mean, we had a couple of 4-hour candles temporarily breaching above the 61.8, but once again rejected from there. So it is very, very clear that despite OPEC trying to keep the price elevated, it seems that there's no momentum, there's no upside momentum. So I do think that crude probably remains a very decent risk reward opportunity to the downside, especially if we breach through this channel. I think that there's nothing going to be stopping us to make it from like 55, 54 and a half to down to 51, probably in a very limited amount of time. We had a Aussie CAD. Let me check if you remember, I mentioned, because we had the alert, I mentioned the potential of an inverted head and shoulders formation in the Aussie CAD. You can see here that we got rejected once again from that neckline, but now we're headed there once again. And Kiwi CAD currently testing for third out of the last 4 days, the 200 daily moving average. I think this has the potential of squeezing all the way back to almost 89 cents. Now, euro is at the lows of the day, having pared back all of yesterday's gains, but keep in mind, we've seen that multiple days. This is the 4th consecutive day. This 107 area is an area of support and resistance. You can see it here, right? I mean, it acted 4 consecutive days as a resistance there. It acted 3 consecutive days as support there, multiple days as resistance there, as a support. And this time again, it's acting as support. This is the 4th consecutive day it is. So don't go out selling Euro USD exactly on top of this 107 level, because, you know, what tells us that it's not going to act again as support, right? So good US data, but the dollar doesn't seem, with the exception against the Canadian, which, as I said, is mostly an outcome of the horrific Canadian data that we got. I mean, when we're talking about like a huge outlier, it can't get, you know, worse than that. I mean, I don't remember when there's the last time I've seen unemployment climb by like almost 0.5%, while you, at the same time, you have participation rate falling instead of climbing. So Canadian data, extremely weak. So I do think that probably the Canadian is, let's have a look at the Canadian against the yen, speaking of which, because the Canadian is worth focusing on after the data we got. Here's the Canadian yen getting rejected again from that trend line. So let's see what happens from here. Let me think, let's see the euro and the pound against the Canadian as well. Euro against the Canadian still within this ascending channel, but to be fair, you know, nothing really impulsive to the upside here. Let's have a look. Obviously, the pound is going to be looking a lot better against the Canadian, taking into account the recent bullishness. Here is the pound CAD testing once again this confluence of the 78.6 and previous high and ascending channel resistance. So this is an important resistance that the market is currently testing. You know, obviously after such a move, buying it up here, you know, is not an easy thing to do, right? Because, you know, where would you place your stop loss? I mean, there's no real risk reward. I still think that the best play having to do with the Canadian is going to be to play long USD CAD once and if we do see 133.50, 133.50, 133.60 being broken to the upside, because I do think that if we get that move, we should at least get an extension equal to the height of this channel, which coincidentally or not, would more or less target that previous high at 137 almost, right? So a breakout from 133.50, I think it's going to be a great play for almost 137, 136.60 to 137. Anything in between 130 and a half and 133.50 obviously remains noise, in my opinion. But as I said, after that kind of Canadian data, if the dollar doesn't in general collapse against everything, so if the dollar continues being, let's say, decently bid, and we get that breakout, I think we should find continuation. I'm pretty sure that only the amount of stop losses that might have gathered, you know, above that area should be enough on its own to trigger, you know, quite a decent squeeze to the upside. Of course, the opposite would also apply in an event of breaking below 130, because there have to be also a decent amount of limit orders and stop losses placed below 130. So whichever of the two is taken out, I think we're going to see some memorable price action continuing from there. USD NOK, by the way, not very related, but USD NOK still playing out its potential of a head and shoulders formation. But as I've said, we don't want to lose symmetry here. So if this is to play out, so if a potential bearish scenario is to play out from here, I would really want to see like now 905, 907 being taken out rather shortly. Otherwise, this is not going to be looking like a head and shoulders formation anymore. Go ahead, coach. You were about to say something.
Oh, I just want, oh yeah, our guest today, I'd like people to stick around, see a few people leaving after the number. If capital is an issue for you, you're trading a very small account, I don't trade a huge account. So if you don't trade a huge account, even if you're doing okay, 30, 40% a year, it doesn't generate much. But we have Connor from Top Step FX is supposed to be here at the top of the hour to talk about their prop trading program where you could get funded. I'm not sure about costs and everything, but he'll talk about it. So I know a lot of people are in that position. They're good traders. They just, could take them 10 years if they're trading a $5,000-$10,000 account to really have it make a difference in their life. So prop trading is a way to go.
And Top Step, which is a very, very legit company, we've started working with them, and they have a great business model, in my opinion.
You looked at the prop trading program, bro?
They give you the opportunity to prove yourself, actually, and if you have the ability. But I'm going to let Connor go through all that. If you prove to have the ability, they're going to fund you so you can actually produce some tangible results and share profits. So I do think it is worth listening into what
also,
Connor has to
Connor,
say.
if you're here, can you raise your hand so I could find you at the top of the hour? I don't see you here yet. Okay, thanks, Steve. Just wanted,
By the way,
some people go, oh, all the action's over, da. So I wanted to let them know.
It's not over. It might be the beginning of the day. You know how it is.
Yeah.
By the way, no surprise there. Obviously, after the data that followed, gold got rejected. If you remember, I was very, very clear about the possibility of 1480 to 1485 rejecting gold and producing one more leg to the downside. And if you remember, I explicitly said that especially silver looks like it's bear flagging here. It hasn't broken through yet, so let's be fair about that. But if we do see some dollar strength following the NFP data, I do think that we're going to get that one more leg to the downside, both in gold and silver, with 1630 being the next area of support for silver. Quite a nice area because it's going to be both the 61.8 and the 200 daily moving average has very much converged to that area. It's almost there. And in the case of gold, 1433, confluence of this triangles, trend line support, and the 78.6 of that last leg higher. So personally, I'm not changing my mind. I'm not losing my faith in the medium to long term upside that the vast majority of the metals and tangible financial products have to offer. But as I have been saying, that doesn't mean that we can't first see a lower low before we get a continuation higher. So very beautiful rejection from 1480 for gold, and why not 1430, 1433? We can see that print before we get any higher. Now, having to do with the reaction of the rest of the metals, platinum more or less unfazed, and palladium at all-time highs once again, also unfazed. I mean, Palladium has been honestly a beast. I do think that sooner rather than later it's going to produce like a deeper correction, but it's been very hard to fade. And if you remember, I made that very, very clear. We had indicated this. This was a textbook cap and handle formation here, which had an implied target of 1940. So I see no reason why we can't make it to the 1940 area before we end up getting some type of a bigger corrective move to the downside. Let me see if you have any more questions. Can you give your view in USD yen once again? Yeah, I did it yesterday. I did it today. I can do it again because it's very brief. We have a potential inverted head and shoulders formation. The neckline is up there, 109.70. We also have a support just below 108. Anything in between is noise, in my opinion. So I wouldn't want to be trading it below 109.70 or above 107.80 unless you want to fade it. So which means if we get back to the neckline, you know, from a risk reward perspective, it's worth, you know, seeing if it can get rejected once again. Or if we go down to 180, from a risk reward perspective, it's worth being long, seeing if it can actually find support once again there. But once it breaks through either of those levels, I think that it's going to produce some nice follow through. So then you don't want to be in the wrong side of the market because probably you're gonna be in trouble. That's my point of view. Now let's have a look at the reaction, and here it is actually. Here is the reaction of the 10-year Treasury. So obviously the opposite reaction in the yields, which means that yields should be jumping higher. Here they are. And yesterday, as you mentioned, very correctly, Coach, we talked about the possibility that this seems clearly as a corrective move, but you know that doesn't mean that the corrective move is over, right? I mean, we can easily move back to 2%. We can perhaps, you know, it depends on how much longer it takes. We might even move a little bit higher than 2% before we see the next extension to the downside. So,
or it could peak here, and you know, in your red box. Doesn't have to.
Yeah, of course.
Everything can
It
happen.
can.
You know,
But
Steve, what I'm
confirmation-
interested in is, you know, if you have a chance before counters here, is your view on crude, because crude yesterday took out the highs, recent highs of the range, and it almost looks like it was a stop hunt to me. And I'm wondering what you're seeing there. And we're lower today despite
Yeah,
risk on.
I already covered it before on the forward chart. I'll gladly do it again.
That's okay.
As you see from a daily closing basis,
Yeah,
the 61.8 is holding like a champ, right?
Yeah. They just went, it looked like a stop hunt. They took out those highs, you know?
Yeah, and it looks to me with everything baked in the price. I mean, we had the rumors of the OPEC cutting. We had the facts. We have the Aramco deal coming. They're doing everything to support it here. And despite all that,
we're lower today.
This rebound higher has definitely been very, very sluggish, and momentum is completely absent. So I'm still an advocate that there is a very high probability scenario that crude is going to be headed back to 51 sooner rather than later. Perhaps once we get the Aramco IPO launching, I wouldn't be surprised to see crude just, you know, crapping the bed immediately after, right? So yes, I do think that from a risk reward perspective, crude looks like a very appealing short. And I think it's going to remain an appealing short, even if you want to wait for confirmation. And what would that mean? It would mean waiting for it to take out this low here at 54.70. The risk reward is still going to be in your favor, because I think once that happens, there's nothing much that's going to be stopping it to come down to 51. So there's still going to be like more than $3.50 of potential downside following. At the end of the year, do you think the market is tradable? I think in general that the markets we've recently had are untradable in comparison, of course, always. I mean, the good thing about monitoring, and that's one of the reasons I very much advocate. I'm an advocate, and that advocate for trading multiple instruments is because they give you the ability to pick the better opportunities out there even when the market is quiet. If you're monitoring quite a few amount of instruments, there is always something that is truly appealing. Because if you constrain yourself in like trading 3-4 instruments, and let's say they're like tightly correlated with each other usually. Let's assume that you only like to trade Euro USD, Pound USD, Aussie USD, and Kiwi, let's say, right? I know traders like that. So with the exception of the recent period that the Pound USD exploded higher due to specific reasons which had to do with the market having to reprice a disorderly Brexit, I mean, you can easily have long periods of time that those 4 instruments are going to be very, very unvolatile, and you're going to be trying to find opportunities where opportunities don't exist. But as a general rule, the vast majority of the markets have not been really tradable. I mean, the trading environment since we've had all this US-China and Brexit saga, take the main, becoming the main events of the financial markets. It's been really bad. It's been really bad because you see many moves and many potential formations that produce no follow through, and many false breaks and many false moves. So I think as long as the environment remains like that, you have to be very selective. You have to restrain yourself from trying to subjectively find opportunities where opportunities don't exist, because you know how it is. I mean, if you let's say you have 5 women in front of you, or 5 men, I don't want to make it sexist. I mean, it doesn't really matter. And you're a woman or a man, and you have to judge them, how they look. You're going to be influenced by the most beautiful and the worst looking, by giving, a value to the rest, right? So sometimes the same thing happens with the markets. I mean, you get a horrible market environment with no volatility, and then something moves a little bit, and in your eyes, it starts looking volatile. While it isn't volatile, it just looks a little bit better than, all the rest, which are really, horrible. So then, you easily get, my mind play game, our minds play games with us. You can easily persuade yourself that this might be a good opportunity when it actually isn't, objectively judging. It's only in comparison basis, it might look better, but it's still not a good opportunity. So I do believe that until we get some type of a resolution and volatility picking up once again, which is going to happen inevitably sooner rather than later, I think that you should take few trades, very carefully selected, and especially under this kind of an environment, you have to keep your targets conservative. So, this is not the type of environment that you should be looking. I mean, I'm the kind of person that likes to take trades to chase after moves of 200, 300, 400 pips. But, I have had to adapt since, the past like 5-6 months, because we rarely get these kind of moves, right? Crude is temporarily impacted due to weaker euro. Fundamentals are bullish, target higher on risk on. If that was the case, Gautam, then let me ask you something. Why, with OPEC cutting, with so many geopolitical stuff that was happening in the Middle East and everything else, and indices hitting new all-time highs, crude is finding it so hard to produce a move to the upside? sorry, the fact that it is diverging so much with risk on is what makes me believe that quite the opposite is the case here. Now, in the markets, you have to be flexible and you have to be able to change your opinion when your opinion needs to change. So where would that, in what level would that, I would change my opinion about being bearish crude if we take out this trend line resistance. Okay, as long as we remain below it, I still believe that crude is in danger of actually plummeting lower. That's my point of view.
Okay, buddy.
What if FX is dead for good? If central banks are trapped, it's possible, in my opinion. Rob, I'm going to tell you that this is the biggest fallacy and the biggest mistake you're doing here. And I've mentioned it multiple times in the past. In essence, what you're saying translates in the most dangerous sentence we ever had in trading.
Different this time.
Yes, what if this time it's different? The answer is no. This time isn't different. Central banks are once again, despite all their efforts, despite managing to delay the inevitable, they are going to fail, and they're going to fail spectacularly, and we are going to get again in an environment with very, very increased volatility. You can count on that.
Professor Connor is here. Do you have a pop quiz for us before you go? Steve?
What do you mean about pop quiz?
Well, I feel like, you know, I'm at a lecture. So I was wondering if there was some kind of pop quiz before I bring our guest on.
No,
I'm ready.
No.
You know, a university professor, when I was on my master's thesis, asked me on the test, what's worse, apathy or ignorance? And I said, I don't know. I don't care. So anyway, that's how I got my doctorate.
And you got an A+.
Yeah. So thanks, Steve. Another great week working with you and the team. Everyone, thanks, Steve.
Feelings are mutual. Have a great weekend, everybody.
Yeah, Professor Vulgaridis. Help me say your last name. I should know.
Vulgaridis.
Vulgaridis. Was that better? Vulgaridis.
It was better, yes.
Oh, okay. All right, Connor. Really a pleasure to meet you. I'm going to get you all set up now. And you're now a panelist, Connor, and I'm now unmuting you. Welcome to FACE, Connor.
Great. Can you hear me?
Can hear you, buddy.
Awesome. Yeah, I don't know if I can keep up with Steve, though. That was Econ 400 there.
Yeah, well, you know, you could, what they say, you could audit his class here almost every day.
Yeah, that's true. I mean, that's the beauty of ForexAnalytix, right?
Yeah. So if you want to share your screen, there's a green box.
Cool. Yeah, I've used Zoom a couple times, so I think I do see a share icon.
Okay.
Cool. You should
Got
be
you.
able to see it.
All right. So Connor, I know the reason you're here, but perhaps we could just start with a little bit about your journey into the market. So why don't you tell us how it started for you and how you ended up here with Danny and the team.
Yeah, absolutely. And, you know, first of all, thanks for having me, guys. I really appreciate it. And for everyone who's being here, you know, very much appreciative. But and we're happy to be working with the ForexAnalytix team. And in terms of my personal journey, gosh, I've been in the markets now probably almost 15 years. And I started, I'm based out of Chicago, Illinois. So if there's any Chi-Town people here, you know, had
well, I am.
Oh, good man. Great Bears win last night, right?
Oh, yeah, I watched it. Yeah, it was nice. You know, maybe they finally have a quarterback eventually.
Yeah, right. We'll see.
But anyway, yeah, so I'm from there. Grew up in Skokie, used to run on the floor, and was an out-trade clerk at the old Merc, probably before you were born.
That's right. I remember us talking about this before.
Yeah.
Well, I'm a South Side guy, so. You know,
yeah. I was too until we moved.
Oh, perfect. Good.
Yeah,
So,
South
there you
Shore
go.
Country Club, Stony Island, but I guess you could imagine why we moved.
Yeah, right. Exactly. I get it. Yeah.
Okay, buddy. So,
Yeah.
all right.
So,
So, did you spend any time on the floor when you got started, or
yeah.
what was
So
your first job in the business?
right. So my genesis was I actually was in college, and then I was working like many people do in Chicago. For those that aren't familiar, and when the pits were the trading pits at the Chicago Board of Trade or at CME Group were very populated back then, I'll say. Essentially, what happened was a lot of people that were in college. I'll just call it what it was. It was a lot of nepotism, right? You knew somebody or
Right.
or had an uncle or whatever that worked down there, and you would get a job as what was called a runner. And a runner was basically just that. You literally basically ran errands, while the guys were trading in the pit. They didn't want to leave and miss any opportunities. So you would kind of run some errands, you would do some administrative work.
Oh, well,
And
you're a runner even later, because the runner's job used to be to take the paper out to the pit.
right, and that was a big part of it. Still, no problem.
Oh, okay. Okay.
Yeah,
So it was
but
still getting orders from different
right.
brokerage firms. Okay.
Yeah, exactly. And you were basically running the orders from, whoever was taking the order on the
Yep.
phone from the brokerage firm. You were running that into the pit, handing it to your whoever you worked for, your broker, and then they were
Right.
going in and executing the trades.
Did you ever notice they were always a little more interested in orders that had STP at the end of it?
Yeah, exactly right.
All right, buddy, go ahead.
Did notice that, yeah. So from there, you graduate up to a clerk. A clerk, you kind of clear the trades. At the end of the day, you reconcile the book, etc. So I did that for a few years, and then went to work for a brokerage firm actually outside of that. And this is when things were really moving to the screen. So when they were moving to the screen, I worked for a market strategist at a futures brokerage firm. And for those that don't know, we're talking about futures right now, not Forex.
Right.
And essentially got kind of an orientation, a little more in depth in terms of the analysis side of the business and market strategy and charting and all of those things. And, he would put out a newsletter to his clients, et cetera, every day. And, picks and suggestions. And this was back when, you were paying a broker big money on either side, talking $50 a side, to execute a trade, or, more than that, for that kind of advice. So it was definitely, they called it broker assist back then, but that was a big part of it before, the proliferation of day trading and self-directed.
They assisted you converting your equity into commissions.
Exactly. Yeah. They never
guilty.
Exactly. Oh, we all are, right?
All right.
Yeah, it wasn't a performance-based job for everybody.
The old inherent conflict of interest in the brokers.
Exactly.
They used to have a commercial counter that would run on CNBC, and it was based on the unknown comic from the Gong Show. So it would show a guy with a bank of phones and wearing a paper bag over his face, and every phone was, "Sounds good, let's do it. Sounds good, let's do it. Sounds good, let's do it." Everything sounded good.
I actually just I read something yesterday that was, and I forget where it was or what it was from. And actually, I think it was a book that somebody wrote that was recommended to me about Wall Street. And this was Wall Street in New York, but the same concept. And essentially, it was all the investment bankers and all of the brokers had all of their yachts. And he asked, where's the customers' yachts? And essentially, it was like, well, the customers don't have yachts.
Yeah, they used to.
Right.
All right. So okay. War stories. I don't. I have a problem shutting up sometimes. So
no,
I really want everyone that's here and that watches this video later, Connor. A lot of traders may have skills, but they don't have capital. So to get to point A to point B, people ask me, "Dale, can I make a living? Can I trade for a living with 10K?" And I say, yes, if you're willing to live under an underpass. So, prop trading programs are a great bridge for someone to be funded and have a chance to really make a living, because let's face it, it's easier to make money with more money than less. So
Yeah.
why don't you tell us, maybe we should just dig into your prop trading program here and let people know how it works.
Right, absolutely. And just briefly before I do that, I will say, so people don't think that my expertise is just at a clerk level, I then went to work as an analyst at a hedge fund, went to work and traded in the S&P, or was in the S&P Fed and on the floor of the CME, and then ultimately got and have been at Top Step for 8 years.
Okay, so you met Danny. You met Danny on the floor then.
Danny Riley,
Yeah. Okay.
Yeah, I
All
did.
right.
But anyhow, so essentially, yeah, I mean, when you're talking about capital and you bring up a great point, Dale, is that this is the ultimate, this industry, right? Where the old adage, it takes money to make money, could not be more true than in trading, right? And a lot of people don't have money, right? And or enough money, I should say, to leverage and really make a living out of this. And we saw really a need in that market. And we started out in the future space, backing futures traders, and we saw a real need for it in the Forex space. So we launched Top Step FX. We've been around for 10 years in terms of our genesis. Overall, we've been in the FX space for a couple years now. And it's been really successful. And really our model is to give those people that don't have the ability to have a large account or really even just want to take risk off. Sometimes, people don't want to be in the live markets because things aren't going well or whatever the case is. So the way our model works is it's really unique in the sense that we have an evaluation where we evaluate your trading performance in a real-time simulated account. And if you can meet our criteria, we will back you with our capital to trade for our prop firm. So we're essentially going to seed you and give you money. So it's really this model of, just show us, prove you can do it, and we'll take the risk, and then we'll split in the upside on the profits. So
how long do they have to go through this process to where that they're worth taking the risk to fund?
Sure.
Like guys that have been through it or ladies that have been through it before, how long does it usually take them if they have the skills to be funded?
Right. So we have no limit in terms of days, or no minimum in terms of, how it works.
Okay.
If you do make it in one day, it never happens. I mean, maybe it's happened once, and we still put our money up, and obviously, that may not have been great business on our part, but we do what we say we're going to do, right? So, but most of the time, I would say we see traders that, 30, 60, 90 days, depending upon your style, what type of size you're trading, et cetera. Yeah.
Okay.
And you can see right here, we make it, I should say simple, not easy. Trading isn't easy by any means, but we make it really simple. And you can see right here on my screen that, our account parameters, we offer a couple different sizes, but essentially, in our middle account size here, which gives you, 300K in buying power in a funded account and in a simulated account when we're evaluating you, we keep it really simple. You have a $2,000 weekly loss limit and, a $2,000 account loss limit. So basically, don't lose $2,000 in a week and don't lose $2,000 over the life of the account and make $3,000. If you can do that, hey, we'll give you a funded account to trade our capital. So we used to have other rules and other risk criteria in place, and we realized at the end of the day, if guys can manage risk and they can show a decent return, we're willing to put our necks on the line.
Let me ask you this. Do you find that people, just like in real life, Connor, trying to get to their goal, use too much leverage, and they're trying to, they don't have patience to grind it out to get to that level? They swing for the fences
all the time. That may be the number one reason. I mean, I would say, that is over leverage is up there just as much with, I call it over trading. You can call it what you want, but it's essentially not knowing when to stop, right? Guys get down and they don't know when to walk away, and they keep trading and they just keep digging that hole deeper and deeper, thinking that, what's the definition of stupidity? Doing the same thing over and over again, expecting a different result, right? So a lot of times, we recommend, hey, have a loss limit in mind. Like, we give you a loss limit, not on the day, you know, of course on the week, but be judicious about it, right? If you're down $500 in a day and, you know, you only have $2,000 to lose on the week, you know, hey, today maybe isn't your day, you know, turn the computer off, go for a walk, do what you got to do, grab a coffee. But yeah, a lot of times it's just guys that either A, are over leveraged to begin, or it's a combination of both, right? Either A, are over leveraged, or B, just don't know when to stop when they get down.
Okay, thank you. All right. So what else you want to cover in here?
Yeah. So I mean, and how much time? I don't know how much time do we have there, Dale?
As much as you want.
Great, thank you. That's dangerous, but yeah. So essentially, like I said, you know, we keep it really simple with, you know, a weekly loss limit, an account loss limit. We've funded, you know, over this year we'll have already. We funded over 1,200 traders, I believe. So it's a great amount, and we have guys from all over the world. So, you know, that's the one beautiful thing about trading, I think, is that it's the market is the great equalizer, right? I don't care if you're sweeping the floors at Walmart or if you're, you know, have a Harvard MBA. If you know, come to the market and you can prove in the market that you can trade, then, you know, you deserve an opportunity, and that's really what we want to provide. Now, in addition to that, you know, we want to work with, you know, companies like ForexAnalytix, because you guys are a perfect complement, because, you know, you're educating the traders, right? You're supporting them every day and giving them the tools and the signals and the things they need to succeed. And we really want to be that funding aspect. So, you know, take what you're learning with ForexAnalytix and what you're utilizing there, and, you know, put it into, you know, an evaluation with us and earn a funded account, because that's our model. You know, we take a profit split after someone gets funded. It's an 80-20 profit split, 80% to the trader, 20% to, you know, the house, to us. So it's very, very generous. And we want you to put, you know, your knowledge to work. You can do it in a live account, of course. I hope you know, some of you are. And but with us, you know, you have the ability to leverage up much more quickly, scale up much more fast, make more money, and that's really one of the main values of what we offer. So just to dive a little deeper, you know, in terms of some of the details of our program, you know, I'm not going to read all of this, but essentially a weekly loss limit, we go by your net P&L. So from Sunday at 4 until Friday at 3:45, you know, don't lose more than $2,000 on your net P&L. We're using MT4, supporting it. We'll soon be supporting MT5, but I assume that's what you guys use and teach on analytics, right?
I don't know. I mean, I trade off an MT4. I'm a dinosaur, so I have a hard time wanting to change it. These guys make fun of me with my you know, tech skills. Anyway, so. Let me ask you, when people are signing up for this and they're doing this, do they have a place to collaborate with other prop traders? Do you have like a community setting for people to be able to share ideas?
Yeah, absolutely. So we have a private Facebook group where there's a ton of interaction between members. You know, people are sharing charts and talking amongst each other. We do a ton of educational resources where, you know, we have a very in-depth YouTube channel where we do a pre-market report, a post-market report, all of those things. You know, but I don't want to step on ForexAnalytix toes too much, because
no, you don't. Look, you know what, Connor? We bring in competitors every day for interviews that have their own services. We're only interested in what's going to help advance and edify a trader's career. We don't sweat losing a subscriber, so don't worry about it. Tell your story.
Great.
All right.
And that's why we love you guys and love working with you guys. And I will say that, you know, your guys' stuff is amazing. So
thanks, buddy.
Yeah, no problem.
Best team I've ever been part of, and I'm not a rookie.
No, definitely. I mean, when they say analytics, they mean analytics. I mean, you can dive deep in every market. Yeah. So, and here's, a couple of the things that I touched on, why are these things important? Adhering to a loss limit, it instills discipline and proper risk management. People believe that trading is all about, making money, and they have this dream, and I want to, see, everybody's out there selling the Ferrari, right? Taking pictures on the beach and everything else. Like that's not real life. You got to come in here and grind every day. So, I have something on my desk that I've had since I was on the floor, and essentially it's proper risk management is paramount to profit. And, essentially, that means every time you're going to put risk on a trade, or risk on, and, essentially risk on in the market, meaning anytime you're going to put money on the line in the live market, always think first about your downside, not your upside. Of course you should have a profit target and have that locked in and envision that. But more and more importantly is where are you going to put that stop limit? How much are you willing to risk on this trade?
And that's the only thing we can control. We can't control anything. That's the only thing we can control.
Exactly. And, like I mentioned earlier, if you're having a bad day or a bad week, at a certain point, you got to call it. We all have them. I've had many, many of them. All the best traders in the world have had them.
How about decades?
Right.
Oh yeah, you've only got 1.5, or I'll talk to you in about 20 years, bro.
Yeah,
but
exactly.
Anyway, it's okay to not trade, isn't it?
Right, and we say, we have something written on the wall in our office that says, always trade for tomorrow, and essentially meaning live to see another day, right? So it allows you to live to trade another day. The markets will be there tomorrow. They're going to be there tomorrow, right?
They will.
And losses can be emotional. Emotions is part of it. We focus a lot here on trading psychology. We put out a lot of content on that on our blog and our podcast. So it's definitely, and we've had you guys on here too talking about a lot of those things. More, you guys are certainly more in depth in the charting and the markets, and which
it's
is
all
great.
In our heads,
right? But
the good and bad stuff,
Exactly, 100%. And then same thing with account loss limits. You've always got to recognize and reevaluate when your strategy is not working in current market conditions. Right? Market conditions change. So what worked for you yesterday may not work for you today. And there's definitely something to be said for being vigilant and being committed and having conviction in your trading. I certainly agree and respect that. But certainly, you have to recognize that you need to take high probability trades. And I always harp on journaling. You should always have a journal and journal every day. What were your trade entries? What worked good? How were you feeling at that point? What was the market doing? And go through. And after, 6 months, whatever, 3 months, 6 months, 9 months, 12 months, whatever it is, the interval, if you look back at that history and you review all of those trades and you go through and you look at your winners and you circle, your really good ones, you're going to see a lot of commonalities there. And you take those commonalities and you put those into, what I consider a high probability trade scenario. And then at that point, you stop taking some of the garbage trades and you only focus on those high probability ones. And you realize that in certain market conditions, I just don't perform well, whether it's me emotionally, whether it's the strategy doesn't work well. If we're not in a breakout session, or if we are in a breakout session, I'm either doing great or bad, or you name it, whatever it is. If volume's really low, I tend to not do nearly as well. Obviously it's going to vary depending upon each person, but you need to self-reflect in this business in order to be successful. And self-reflection is what leads to progress and realizing, hey, here's what works for me. Here's when it works for me. Here's how it works for me. And these are the things, and those are the trades that I'm only going to focus on. And
who do your traders clear? Who do they trade through?
Sure. So we use a broker called Forest Park FX, and then
gosh, we know them.
Yeah, of course, and then equity as well. They used to be Divisa, but equity capital too. So They're a worldwide firm, but yeah, no, Forest Park FX, great guys. I think you've had them on, I'm sure.
Oh, they sponsor their webinar. Yeah, we talk about them being a broker of brokers. So they select different clearing arrangements for you, or you just have one?
So one, and that's the equity capital that we clear through.
Okay.
And we actually we give 100 to 1 leverage. So we have the ability.
Don't do that.
Yeah, right.
All right. Anyway,
I know it's dangerous, but it's attractive to some people.
Yeah.
So,
Okay. I know.
But again, if you're at 100 to 1, you use a mini or a micro. Don't use
there you go.
a standard bot. So, but yeah, back to what I was saying. I think that when you get into that mindset of self-reflection and improvement, that really helps you identify when you trade your best. So that's something we really harp on. And then in terms of currency pairs, we offer some of the all of the, I think it's 22, and all of the majors, of course. Not a ton of exotics. There we go, all 24 pairs. So
okay.
I think that's pretty much what everybody trades with you guys too, right? I don't think anybody trades too much of the exotics, do they?
I talk about this, and you could attest to it, that a lot of people feel they have to have portfolios.
Right.
But how many guys did you know, Connor, that on the floor that never left that trading pit? They didn't have to diversify in different markets across the board. They knew one market like the back of their hand. They never left the cattle pit. Yep. They knew cattle. They traded cattle, and they didn't have to go, explore what was happening in bellies or anything else, because it only takes one.
Right. And that's why, and I agree with you wholeheartedly. I never understood what the value was of having a full badge on the floor, a full meaning that you could go into any pit. And
right. Yeah.
Pit.
Yeah.
And,
I had an IOM.
Yeah. Right. And that's all you need, because, and like I tell people, it's hard enough to know one market well, let alone, 3 or 5 or 10. So I definitely think, honing in on one is the way to go. And I know it's tempting if, there's a lot of volatility in another and things are going slow in yours, but patience is the name of this game, right? I mean,
like Steve Volge says, you screen them all to give you the, 1 or 2 or 3 good ideas. So you screen them, but doesn't mean you trade them all.
Right. Yeah, that's a good way to put it. Screening and then narrowing down, I think is a good way too. But yeah, definitely, I agree with that, and we see it in the numbers, right? I mean, we should actually, now that you say that, we should publish a report, because we evaluate thousands of traders, and I'm sure the bell curve is wild between those that are trading a bunch of products and those that are trading a few products in terms of success. So no, that's a great point. But we do offer, so whatever you trade, my ultimate point, we offer all of it for the most part, again, unless you're doing some exotics or something crazy. And then we do also offer, we just recently offered gold and silver as well. So you can trade gold and silver.
CFDs?
Yeah, essentially. Okay. Yep.
All right.
Yeah, and then trying to find out where it was. Yeah, and then we just we require that you can't hold into the weekend. I mean, you can hold throughout the week. You can hold overnight and swing trade, etc. But over the weekend, it's gets a little riskier when things thin out.
Oh God, I couldn't do that, because I can't relax over the weekend unless I have something to worry about.
Right. Exactly. I agree with you. That's all you've been thinking about. Yeah, I'd be drinking every day. Yeah, if I don't
Key
already.
at the sign of the trader, man.
Yeah, right. And then, I mean, when it comes to a funded account, if you're in a funded account with us too, we try to make it, very, very easy and beneficial to the trader. Generous profit split. You keep your first $5,000 in profits. We don't even touch that. I like to think of it as like a little signing bonus, if you will. So if you come on board and you earn that funded account, and say you make 10 grand in your first month, and you want to take the wife and kids or the husband and kids on a little vacation or whatever, or, you know, I don't know, water heater breaks down, call us. Hey, I want to take a withdrawal. That first 5K, that's yours. We don't touch it. And then everything after that, you get 80%. We get 20. We let you withdraw at any time. We're not, you know, I'm not the 1st and the 15th or once a month or once a quarter or whatever the case is. It's your money. If you want it, you know, come and just tell us and we'll process it within a couple of days. You get a dedicated support and risk management team, which is huge. So when you're in a funded account, when this goes unappreciated, is the accountability factor. So we have a risk manager there who's, you know, watching your performance, watching your account. And, you know, I hear him all day. He'll call you, you know, hey, John Doe, what's going on? You know, what do you like about this trade? You know, this is happening or that's happening. And, you know, just to kind of bounce ideas off of and, you know, hold you accountable, because a lot of times, you know, those habits that do kick in when it comes to over trading or when it comes to over leveraging, it helps to have somebody in your corner who's going to, you know, keep you in check, or, you know, at least a second set of eyes, which again, you know, I think is really powerful.
Okay, buddy.
Yeah, with that, unless you want to cover anything else, I mean, I really just wanted to come in here and do an introduction and an overview of our program. I know we've got slated for, I think we're going to be doing these once a month. So definitely we're going to have our trading, you know, one of our senior, we call him our senior performance coach. He's going to come in here and he'll be diving into markets with you guys. You know, I think it's monthly. Or maybe monthly or quarterly, whenever it is, the frequency we're coming on. And he's going to be talking about trading opportunities. He's going to be talking a lot about the correlation of the futures markets with the Forex markets. I think a lot of people don't realize that, you know, there's currency futures and there's a heavy correlation between the two. Right. And I think that's an opportunity that goes unnoticed. And I understand, because I know for a lot of Forex traders, the futures markets can be intimidating and complicated, but I believe that, you know, John Hoagland is his name. He'll be able to really dive in with you guys and show you, you know, where the opportunities lie, because I think there are a lot, and I think that's a strategy, or at least an analysis that goes underplayed in this business. So you know, go ahead.
So what's the best way for people to get a hold of you? You have contact information?
Yeah, absolutely. I don't know. Yeah. Do you have a chat or somewhere where you can throw out to everybody?
Yeah, sure. We'll put do you have a link?
Yeah. So, you know, again, if you guys are interested in getting started, you just go to our topstepfx.com, and then right here, you know, you come down, you select, you know, what size trading combine you're interested in. And then, you know, you go to start your trading combine. You sign up with us. You know, you get on our email list. We send out all of our content daily. Like I said, that pre-market report, post-market report, etc. But yeah, it's as easy as, you know, topstepfx.com. And then from there, you know, you'll be in our ecosystem, and we'll, you know, show you all the tools and options that we provide. And again, if you're trading, hopefully you're on your way to that funded account. And if anybody has any questions whatsoever, you can get a hold of us at support@topsteptrader.com. And I think I have a trade. And I've got a question here too from Mark. Are those fees to trade your money? Right. So good question, Mark. So these fees right here, this monthly price, this is for you to be evaluated. So you pay, you know, $165 to be evaluated. That's, you know, the real-time simulated account, all the support we provide, the education, etc. And again, if you meet this profit target, you know, don't hit this weekly loss limit, account loss limit, then, you know, you'll earn that funded account. And, you know, really that's just that's so you have some skin in the what's the word I'm looking for? Skin in the game. Skin in the game. Thank you. Yep. Because you know, I'll tell you what, when we first started, gosh, about 10 years ago, 8 to 10 years ago, we had this where we were just doing demos, and we were like, hey, you know, come in, show us your strategy, and you know, we'll back it if we like it. And it was like the wild west, because nobody cared, right? Nobody cares about a demo account. Everybody goes on there and does whatever the hell they want. Whereas, you know, when you have a little bit of an investment, even though it's not much, you know, and you have the ability or, you know, the opportunity of a funded account tied to it, you take it seriously. You take it, you know, almost, if not just as seriously as the real markets. So it's amazing since, you know, we've done that. It's really helped, you know, keep traders accountable and you know, weed people out, if you will, too.
Okay, Connor. Well, really nice meeting you, buddy. And you know, you're now my trading warrior, brother. Everyone I interview becomes one. I have a pretty big family, about 1,000. And really say hi to the whole team for us. And I hope and root for every one of your prop guys that what they see in their mind and the dreams they have in their heart manifest someday with a lot of hard work, because there is no secret to trading. The secret is hard work and perseverance. And it's been great meeting you, Connor, and have a great weekend and a holiday season, and 2020 kick some butt.
No, I appreciate it, Dale, and you know, you hit the nail on the head. This is a grind, you know, day in and day out. I like to equate it to, you know, if you own a bakery, right? You got to be in there every morning at, you know, 5, 6 in the morning. Somebody's got to turn the lights on and operate it all day, and then somebody's got to, you know, turn the lights off at night. This is exactly what this is.
It's a marathon, not a sprint.
Exactly, 100%. Well, I appreciate you guys. You know, again, I just wanted to give a little orientation into who I am, who we are as a firm, tell you a little bit about our opportunity, and we look forward to doing, you know, more and more of these and really deep diving into the markets and hopefully providing a lot of value for everyone, because we want everybody to not only improve as a trader, but, you know, we'd love to see all of you as funded traders with us.
Okay, Connor. Well, have a great weekend, buddy.
You too, Dale.
And appreciate you being here. And that's going to be a wrap. Connor, I say this at the end of every show because, you know, we all get kind of really obsessed with the markets. Don't just count your pips, count your blessings, and try and be one for someone else. And it was great meeting you, Connor. Say hello to everyone and have a great weekend. Everyone in face, enjoy, recharge, plan your trades, and we'll see you next week. Adios, everyone.
Thanks, Dale.
You're welcome, Connor.